So, welcome guys, once again, back to OK Investing, the second edition of Tuesday NewsDay.
Good morning! Ohayou gozaimasu.
So guys, so nice to have you guys back again. Hope you guys are all doing well. Hope you guys have had a blessed week. Now, if you want to skip straight to the section that you think is more relevant, these are the different topics I'll be talking about, and the timestamps are in the description. So let's start this off really spicy. So Apple, they're having their event today, approximately, I think it's like 6 PM UK time, which may or may not be after this video, or as you're watching this video, the event is probably happening. But yeah, loads of speculating that the iPhone 12 is going to launch, so that would be really interesting to see. So Apple's event is this Tuesday, October the 13th, 2020. The keynote is set to start at 10 AM PDT on the West Coast, 1 PM EDT on the US East Coast, and 6 PM British Standard Time. So 6, like I said. And yeah, everywhere else doesn't matter. Please don't demonetize me. So what people are actually expecting from that event is the iPhone 12. So Apple annually refreshes its iPhone lineup, and this year the iPhone 12 is due. So the latest rumors indicate that a 5.4 inch model, or a 6.1 inch model, and a 6.7 inch model will debut. So there might even be two versions of the 6.1 inch model, which could be a standard to the iPhone 12, and the other two would be for the iPhone 12 Pro. Also, AirPods Studio. So Apple is thought to be developing a pair of wireless over-ear headphones separate from the Beats brand. They will be Apple branded and part of the iPods range. So make no mistake, these will be high-end cans. Well, we'll see about that. HomePod 2, so a smaller, cheaper HomePod speaker, is rumored to arrive sometime this year. So far, leaks have indicated that it will be half the size of the existing HomePod, not quite as expensive, and it will still be powered by Siri, of course. And then AirTags. Okay, what is this? So finally, Apple might have developed a towel-like product that uses ultra-wideband tech and Bluetooth combined with crowdsourcing techniques to help you locate lost or stolen items. It's been rumored for well over a year at this point. That sounds pretty cool. Okay. Well, of course, since this upload will probably be after the event, we'll be able to see how many of these actually were true. So this Seeking Alpha article also really bigs the Apple up, so let's just read off this. So Apple shares gain ahead of once in a decade 5G iPhone event. So this is going more into like the technology that they're going to use. So in the new analyst note, Wedbush outlines what it expects of today's iPhone launch event, which was delayed due to the pandemic supply chain disruption. So analyst Daniel Ives predicts 4 iPhone models, all with 5G, so the ones I've already mentioned. The Pro models will likely differentiate with LiDAR sensors for AR. That's really interesting. Enhanced rear camera tech and 4 to 5 times optical zoom. Okay, so I personally, as someone that uses Android like a lot, I give Apple a lot of crap. But do you know what? If they actually produce this and it's actually interesting, and has cool tech in it, then, big up to Apple. So keynote, in particular, we are seeing Apple and its Asian suppliers anticipating stepped up demand for the larger 6.7 inch model, which is raising the overall iPhone 12 expectations heading into this once in a decade potential launch. On the 5G front, Ives expects a US edition with millimeter wave technology, which could be a game changer looking ahead as more infrastructure technology and apps are built around this transformational 5G highway over the coming years. So Wedbush maintains an outperform rating, so all of this is about the stock, which doesn't really matter. Kayana, if you're watching, you should be happy. And one of my other friends who's also invested in Apple, I think this event will be pretty good for them. And when it goes on about 5G technology, it really depends how many cities like really embrace that, and how quickly and how many technologies will optimize like for quicker downloads speeds, really. So yeah, that all seems really interesting. Because a very good thing to note with Apple is, like Kayana said in the podcast that I did with her, which you should watch, loads of people will just buy Apple products, to be honest, everyone buys Apple, but this Seeking Alpha article is saying only 10% of Piper survey respondents want Apple's new iPhone. So in a recent survey of 1,000 Americans, Piper Sandler found out that only 10% of respondents plan to upgrade to Apple's 5G phone this year. Of those planning to pick up a new 5G model, half were inspired by the 5G feature, and the other half simply needed a phone upgrade. So only 10% of iPhone owners expect to upgrade their device. That's really interesting. So if any of you viewers have an iPhone, do you plan to upgrade? Let me know down in the comments. So analyst Harsh Kumar says the numbers are lower than expected heading into today's iPhone launch event. Nearly a quarter of those surveyed like the Apple Watch 6, but only 8% plan to upgrade or purchase due to budget concerns, which makes sense during the times. 12% of respondents said the lower cost of Apple's Watch SE makes them more likely to buy a watch model. So Piper maintains an outperform rating, again just the stock, we don't care about that, we're looking at what the company's actually doing. But this is really interesting. Hope you guys are finding this good. Make sure you smash the like button if you're finding this interesting. So next news story is about Disney again. So we're talking about Disney again. The name of those kind of investors that kind of do moves in specific companies, they're called activist investors. Every time I try to think about them, I always forget. But anyway, recently an activist investor called Dan Loeb calls on Disney to end its $3 billion annual dividend and use the funds for Disney Plus content. So essentially what's happening is this really rich guy with a bunch of money come to Disney and be like, hey yo fam, you see that dividend that you guys used to have? No more. Like, I know you've suspended it because of like what's going on with your parks and all that stuff, but don't ever bring it back. What we want you to do is take that money that you would spend on the dividend and use that to invest heavily into your Disney Plus content, so you will return more value to shareholders in that way instead. And so that's basically it. And I've personally been seeing a lot of blowback from this, and I personally think it's a great idea. Again, I've shifted away from the like, oh, dividends are everything kind of mentality a long time ago. So, and to me, it only makes sense that essentially dividends is money that the companies give just because, like, oh, we're making so much money, just take the money. Essentially, they're saying that we have no better allocation for this resource than to just give it out. One of the amazing YouTubers I watched is Joseph Carlson, probably link down in the description to his channel. Disney Plus, I think, Disney itself is spending like 1/10 of what Netflix's budget is for new content, which is a problem. If you've used Disney Plus, which I personally like, I like the product, but they're relying a lot on old content. To make a streaming service viable in the long term, which could make Disney so much money, they need to be churning out new stuff. As a Marvel fanboy, like, I will love to say that, like, where's all the Avengers shows? You know, like, you should be making so much stuff. They have so much money. Like, I agree with this wholeheartedly, that Disney should forget about its dividend. It wasn't that much anyway. Like, you want the company to do better over a long period of time. That's the whole point of investing, is it not? So I'm really confused with the, like, if Disney goes ahead with this, loads of people are going to jump out. It's like, for what? For like a 2% dividend, or like however much Disney paid? Like, anyway, please let me know your thoughts down below. Next in the news. So I just can't stop talking about Tesla, clearly, but something very interesting has happened. So Tesla has reportedly accused an employee of maliciously sabotaging part of its factory in a leaked email. Ooh, okay, so this is spicy. So Tesla said it caught a worker in the act of malicious sabotage at its main Fremont factory, according to a company email obtained by Bloomberg News. So 2 weeks ago, our IT and InfoSec teams determined that an employee had maliciously sabotaged a part of the factory. Tesla's acting legal chief, Al Prescott, wrote in the email. Bloomberg said their quick actions prevented further damage, and production was running smoothly again a few hours later. Wow. I wonder who paid them to do this. Interesting. So, like, not too long ago, so like this article says, in August, Elon Musk confirmed that Tesla was the target of a foiled Russian ransomware attack. So a Russian national, Igor Igorovich, I'm going to butcher that name, I'm so sorry people, yeah, anyway, was accused by US officials of recruiting a Tesla worker to infect the company's computer systems for a $1 million bribe. He was later arrested as he attempted to leave the country, according to officials. Like, I will definitely make a video on this eventually, but if you want to, as a Tesla investor, if you want to know who Tesla's greatest threat is themselves. So, like, it's attacks from the inside or people leaving the company to just spin off into their own thing. That's what I think the greatest threat is. But yeah, that's really interesting. I'm glad Tesla dealt with that pretty quickly. So, more in Tesla news. Tesla is to launch full self-driving beta tests next week. So, in what would be a closely watched development, Tesla is poised to let some drivers test full self-driving in cars later next week. So, this is what Elon Musk tweet, just reading it out. So, limited full self-driving beta releasing on Tuesday next week as promised. This will at first be limited to a small number of people who are expert and careful drivers. Oh, amazing. So last week, Musk praised the full self-driving advancements of Waymo, but also indicated that the company's approach doesn't match Tesla. So it's like, nice try, you're good, but you're not really us, are you? But yeah, Waymo is impressive but a highly specialized solution. The Tesla approach is a general solution, and the latest build is capable of zero intervention drives, which he tweeted. That's amazing. So that will be really cool to follow. So next week, Tuesday, NewsDay, we'll see how that's gone for those select lucky drivers. And last news of the day, look at me being a massive hypocrite, saying to all those other companies talking about the price, it doesn't matter, but because it's Tesla, I'm like, ooh. Okay, so Tesla wins street high of $578 price target as New Street sees hyper growth. So Tesla gains a new bull as New Street research analyst Pierre Ferragu upgrades shares to buy from neutral and raises his price target to street high $578 from $400 previously, saying the company has a decade of hyper growth ahead and has no credible competition on the horizon. Big oof. The company now addresses the entire premium segment with high-end and mid-end sedan and SUV models, which is an 8 million unit market globally. New Street analyst Pierre Ferragu notes. Amazon has traded in the 50x to 100x earnings range over a decade, and we expect Tesla to follow suit, Ferragu writes. So the only reason why I'm kind of including this as well, and I just want to say that with all these analysts, if you guys follow any kind of financial news, you see analysts will be saying this and then they'll be saying that. They say so much stuff. I personally don't understand the point of doing all these price targets if you're going to change them every week. Like, be bold, be like, actually look at the company and be like, where do I see it being at, like, in 10 years is a bit drastic because that's really hard to see, but let's say like 5 years time, you know, have a 5-year target. But these analysts changing it like every quarter, that just seems kind of weird to me. Like, I don't know, I'm still kind of relatively new into the whole market thing, but the way it just makes them look kind of foolish, because a lot of them just get proven wrong so often. And there is a website that you can use to track how right these certain analysts are, and I think that's very important. So if you ever see any of these articles, look into their specific analyst on this site, which I will link in the description, so you can see how often their predictions have correlated with what actually happens, just so, you know, it adds to a bit of credibility. But yes, if you are one of those fantastic people that have made it all the way to the end of this video, thank you so much. I appreciate your viewership so much. So please remember to like, subscribe, and remember, subscribing to me will pay dividends to your future. I will see you guys for tomorrow's guide video. See ya.